All right, Nathan, are you there?
Yo, yo, yo. I'm here.
Hey. All right, guys. Y'all knows the drills. This is our Tuesday weekly precision markets office hours. We'll spend the next 30 minutes being able to answer any kind of questions that we can have to help everybody. And so, what I want people to do, we've had a couple of questions that were asked in our precision markets Discord. So, I'll tackle those, but just to make sure that I give everybody a fair chance, go ahead and address any questions that you have in the chat, and then we'll address those one by one as they come in.
Good few more people popping in now.
Hey guys, how's it going?
Happening, bro.
Hey, how's it going?
I got a little question earlier on in DM based on premium discount. So maybe I'll just go over it while we're waiting.
Okay. Yeah. Why don't you go ahead and take on that?
Yeah,
One
cool.
second.
So
Give me 1 second to enable screen sharing. Okay. Perfect.
cool. Questions basically based on premium discount with the 4-hour and the 15M. I'll go over that here on the chart. So I'll just bring it up. So yeah, basically premium discount paired with the 4-hour and the 15M. Now, when it comes to premium discount, I use it on the 15M, but a lot of people tend to use it with the 1-hour because it's a little bit cleaner. So it's totally up to you, like what you want to use, something to test as well. And I think the main question actually was, it was more based around like, I think it was like the 15-minute chart. It was like some zone that was in a discount on the 15-minute, but it was in a premium in the 4-hour and stuff. So I was a bit confused, blah, 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 blah. When to buy, when to sell. All right, so I'll just give my opinion on how I view it and how I use it. It is a little different, but basically, I'll just use this for an example, right? So this is the 4-hour chart. We're making higher highs and higher lows. And if I was to take, let's say, for instance, this low and this high, right? Simply, I would just get my premium discount tool out, right? And on the 4-hour, all I'm looking for are areas in which price could tap into to reverse and continue, right? So basically, let's say we don't have this information over to the right. Very simple, right? In discount, I'll be looking at, okay, well, we have this wick, this is an area, we have this zone down here, and we have this, right? And that's all I'd be looking at. So I'd be like, these are areas the price can tap into to reverse, to continue the direction, right? If 4 hours bullish, to make a higher high, right? Well, when it comes down to the 15, I use premium discount for that because this is like my direction of where I believe is the best place to actually buy and sell from until we come to those areas, right? I'm not going to sit and wait until we tap into a 4-hour discounted demand and then take a trade from there. You know, it would take forever until that would happen. So pretty simple, you know, I'll just use the hour for this example because it's probably a little bit cleaner. So with that, I would just mark up simply, let's go down here. So if I was to mark up, say, this low and this high on the 15-minute or the hour, choose zones in the discount, in the premium that I short from until we get into the 4-hour discounted band. So that's what I constantly do. So here we have another zone, price taps in, goes down, and we just follow this down because it's bearish, right? Order flow is bearish at the moment. So it's just making new low. That is making new low here. But you can see as price comes back into the 50%, taps into the premium zone, and you can just basically short it down with premium discount that way. And then you can see now we've tapped into this 4-hour demand that's in discount. We can look for a 50-minute change of character, low taken, high taken, taps in and goes. So that's the way that I use it joined together. So hopefully that clears things up. Don't be waiting on the 4-hour for ages, you know, until it reaches a zone that's in your premium or discount, because you're going to miss out on a bunch of trades. And yeah, that's really it.
Good stuff. Did that help answer? I don't know if the person was on the chat that had that question, but did it answer?
Yeah, no, I think
does it make sense for y'all?
They'll definitely be back tomorrow to see. Awesome.
All right.
Sweet.
Thanks so much for that, Nathan. I know there were. Oh wait, hold on. I think PT asked question. We were bullish on EU this morning on 4 hour and daily, bearish and daily bearish, 15-minute bearish. How do you navigate these time frames? Do you look at daily, weekly? You want to tackle that one, Nathan?
Yeah, see, I have to read these questions like 5 times. What is it?
I think what he's asking is with 4 hour
Navigation.
being bullish, daily being bearish, 15-minute bearish. How do you navigate managing when there's different, like one time frame is bullish, another one's bearish, etc. And then how do you manage those? Do you look to another time frame or such?
Yeah, I guess it all starts from the top down, doesn't it? It's really starting from the daily because the daily is more weight over the 4 hour, and then the 4 hour is more weight over the 15. So the last thing you want to do is just be following 4 hour constantly and leaving the daily out of it. But as you know, it's a perfect example now that what we have on EU is that we tapped in, well, we came to just over 50%, right, of a retracement, and the daily is bearish, right? So we are, in theory, supposed to put in a new low. And with that being said, it's like it's a multi-time frame analysis, isn't it? Mm-hmm. So do I look at the daily and the weekly? Well, I look at the daily, and I guess once a week I'll look at the weekly. To be honest, I barely even look at the weekly, man, to be honest. But you know, you can get caught up in the 4 hours all the time, you know, because it is our main intraday trend to trade from. But you know, we have to keep the daily in mind because we're following the bigger time frame. You know, it sets more weight on top of it. So
right. So, and see, I don't even look at the daily. I look at my 4 hour and then I wait for M15 to align because it is what I understand about multi-time frame market structure and expectational market structure. We're going to look at the 4 hour, wait till 15-minute aligns to that unless I know that I'm expecting something to change on the 4 hour. And if I don't know what the 4 hour is going to do, I go look at the weekly. I'll skip the daily altogether.
Yeah, I don't know. I think today was a really good example for I think where everyone was waiting to buy and we're sitting in these demands, these 4 hour demands thinking, you know what, we're bullish. This is going to hold. And it tapped into that daily retraced and it's like, holy shit, it's melting now. So I think it's like a really good example that, you know, these higher time frames have so much influence, you know, over the lower time frames. And we think sometimes the 4 hour is, you know, the king of things when, you know, we have these other higher time frames that we should look at for every once in a while, whether it's the weekly as well. Like I haven't even looked at the weekly, man.
Right. Right. No, see, we passed this higher low right here, and that was yesterday. So my thoughts were, okay, if it's today, and this is what I had originally in the morning when I said, okay, this was the demand for H4. We now broken swing structure. So I know Infligent had a question about structure chalks and supply and demand chalks. So for this right here, this would have been what I would have considered a demand zone. And the reason why is because that's the last, what I would consider H4 demand that ends up breaking. Let me move my Zoom thing, guys. It's all up in the way from me getting my chart. It's the last demand right here that breaks, well, this high, but also it broke this higher high, denoted by this blue line that shows. So this would be an example of a chalk when it gets broken here that breaks a supply and demand. But when it came yesterday and it broke this low, for me now, this is eventually going to turn into a lower low. So all we're waiting for is just confirmation on pullback. So now when I look at, you know, H4, one of the things I'm thinking, okay, now that we have expectation order flow, one or two things can happen. It makes a low here, it comes up somewhere in this region and it goes down, which would make this be a lower high, and this would be eventually a lower low. If that scenario doesn't work, what ends up happening is this lower low goes and it goes in to break this higher high. And then at that point, it comes back to make a higher low and then continue bullish. So those are the two scenarios that could play out. Until then, I'm selling until I see a change in momentum in the 15-minute. And if I go up one time frame higher, let's just look at what happens on the weekly. So the weekly went from making lower high, lower low to, hold on a second, sorry guys. Lower high to a lower low, lower high to a lower low. So now knowing that, what my expectation is that the weekly is going to go up like this. So let me actually pull up a line. The weekly is going to go up to make a lower high and maybe go back in this region. So now knowing what I know, that means that probably what I'm expecting for the 4 hour is the 4 hour is going to go, it could come here, but I expect more that it's probably going to go past this higher high. That's what I have more of a probability that I think would happen, and it do something like that. But we'll see. Any one candle can completely change my bias. So just because I said this today, tomorrow I can see new information and everything change.
Exactly.
So always be a little bit flexible, guys.
Reactions only, no predictions.
Exactly. I don't make predictions in the market. I have a bias, but it can always change. All it takes is one candle. That's what I always tell people. It takes one candle to change my entire mind. So all I gotta see is one thing. Somebody, Bullet Matic had a question. You want to go ahead and share your question? And then also InflowJet, did that answer your question regarding how to see supply and demand shocks versus a structural shock? Let me know in the chat as well too. Let's take a look at daily. So daily is still bearish. So judging by daily, it could, expectation order flow would say that it would make a lower low, and this could be potentially your lower high. So depending on what you use as a higher time frame, it could, but daily, yeah, daily and 4 hour. Well, 4 hours unconfirmed bearish. Daily is confirmed bearish. So it could be one of those two things, but we'll see. I mean, we'll see what the market gives us. Okay.
See, this is the thing, is that when it comes to like structural things and the legs are so high, I think that's when like the break of supply and demand comes in really handy, rather than the structural chalks. That's when I use them, is that when the legs are just so far away, it's like, okay, I got to work with what I have. And exactly, break of supply and demand is the best for that in my eyes.
I'm gonna go back to FT's question. How do you set up and enter continuation trades in such an aggressive trending market? So, I mean, you just gotta follow. You gotta follow. To me, you gotta follow where the trend's going. So when I come back and I look at 4 hour, I don't know where this is going to end. I mean, I can look left and say, okay, here was a previous extreme demand right here, and we see the candle momentum is still breaking through, right? So this could be anticipation of a spot where it stops. But the way I have my rule set is I'm just going to take where we get to the first chalk. So all day today, I just been saying, okay, every time M15 breaks, I'm going to take a trade. And so this would have been the first spot. I would have taken a trade from right here. Then I would have looked again for another trade right here. But as you see, it never comes back. I would have looked for another trade right here. It never comes back. And I'm not even looking at the rest of the day because because I'm past my trading hours at that point. So you just got to follow where you see the trend going until you get a reversal. And so for me, I'm gonna have to see some type of chalk like this, and then I'll start buying and expecting that the 4 hour has made, this is the point where it's going to make its lower low, because guys, we do the same thing on every time frame. The market is fractal. So you wait for a M15 or M10 or some type of POI, right? So we're going to say this is our M15 supply. You're going down to the 1 minute and you're waiting for a chalk, right? So you come in here, and just for all cases and purposes, we're going to say, here was the chalk. Oh, that would have been a good entry right there. And you get in on this trade, and we had the chalk, something like this, and you enter, right? So if you're going to say on the 1 minute, you use a chalk for price to reverse direction, apply the same thing to the 4 hour and the 15 minute. So when I think the 4 hour is going to make a lower low or make the lower low, I'm going to see a 15-minute bullish chalk. And it's the same rules. You just apply it on different time frames. So I hope, FT, let me know in the comments if that answers your question. And Nathan, while we're waiting on that, is it anything else that you want to add?
When it comes to continuations, is it?
Yeah. Mm-hmm.
Not really, marking out them higher time frame POIs and wanting to see what you want to see, which is exactly what you just showed there. And sometimes they just don't come back to mitigate. And sometimes things don't fit your plan, and that's it. You just move on to the next one and be patient, really, isn't it?
So I got a question. So as in taking continuation trades, so say I'm on the 1 minute, all right? I get an entry on the 1 minute. Once I get that entry, do I take continuation trade on the 1 minute, or do I go back to the 15 and find another continuation trade?
The way I do it is I look at it like this. So this would have been considered the chalk and flip. And then we have one more flip zone or another continuation of flip, like right here, right? When price starts to get further down to get the third, fourth continuation flip, I'm not chasing price, because price has ultimately left the M15 POI. So if I was to draw a line, I'm gonna draw one right here. Hopefully it shows up. And one right here. And I'm gonna draw one down here. Now, keep in mind, we're trying to see momentum on the 15 minute, but also keep in mind, price doesn't move in a straight line. Price likes to pull back. So this was like the first one. Let me see if I can delete some of this stuff so I can make the chart a little bit easier to see. All right. Okay, perfect. This might be hard to see, and I'll try to draw attention to both of these points. This is our POI, right? This is the first trade that I pointed out. This is the second trade, and you can't see it, but right between these two candles is the line for the third trade. So it makes sense to maybe take the first entry, the second entry, but after that, I'm not chasing price. I'm just going to wait on M15 to come back into a new spot, because obviously the momentum has already left our M15 POI. And this would be whatever spot we expect for this to be a high or low, and price is going down. I hope that makes sense.
Yeah, it does. Cause I kind of catch myself trying to get in cash on trade safe hands. I'm coming in late. Like I try, I guess, hurry up and get in the trade, and that will kind of burns me out a little bit, trying to chase trades a little bit.
Yeah, don't chase trades, guys. If the trade leaves on without you, you're better off not trying to enter the market unless you want to enter. Unless you want to do something like this, you're going to enter and put your stop all the way back, because you have to. I mean, you can do that, but you're going to lower your risk to reward. You're not going to get that tight entry of what we're looking for, usually with how we execute our trading plan that most of us commonly share, you know?
Yeah. That all comes down to price is fractal, right? So it needs to pull back, and another time frame needs to mitigate and continue, and then another time frame needs to mitigate, continue. So it doesn't go down in a straight line, like you said. So when it comes to continuations, for me, I'll just take them off the 15-minute POIs, any 15-minute sell to buy wicks, things like that. Chasing the 1 minute, just like you pointed there in the third trade, that came back to remitigate and continue down. And I think that's when a lot of people just tend to get stopped out of their trades. So price is fractal. Remember, it has to happen on every time frame.
Right. So don't chase price, guys. It's not worth it in the end. Infojet. Okay, yes. They just question, how did you know when the next M15 chalk up now since structurally M15 is practically 7 picks higher at the moment? How did you know? If I understand you correctly, InfoJet, you don't know. So I'm just waiting. When I see it, right? I mean, this is potentially a previous 4 hour demand that was unmitigated where price is at currently now. And so all I'm waiting for is just wait to see. And it's outside my trading hours. So more than likely, maybe during the Asian session, price moves up and it comes back down to London. And by the time I get in pre-New York, I'll see what I'm looking for. But I literally just come to the market every day with no expectations of what it's going to do the next day. And I just look to see what has it done since the last time I looked at it. And then I make my adjustments for the day because, like I said, all it takes is one candle to completely change my bias. So I don't really want to know. I don't really need to know what the market's going to do tomorrow because I'm going to adjust to what it does anyways. So it's just more or less, I guess, a patience thing or just waiting until I see that chalk and then know, okay. And then more than likely, when I wake up tomorrow, if this was an M15 chalk, there will be a bullish candle right here and maybe a small bullish candle right here that happened during the Asian session. And now I know, okay, this is definitely my lower low. I hope that makes sense. Awesome. And then Peach Cheek asked, would you refine it to daily? Or Luca asked, 4 hours actually confirmed bearish. I use a slightly different market structure rules. So for y'all, it may be confirmed bearish already, but for me, it's unconfirmed. Oh, which pair were you talking about? Oh, well, yeah, Nathan, it's unconfirmed bearish for you too, right? I just want to make sure.
It is indeed.
It's unconfirmed for me too.
Okay, y'all got me questioning myself now.
Hold on, it's unconfirmed for you, Peach.
Oh, this is Mac. It's unconfirmed for me, bro.
Yeah, totally.
Okay.
Good,
Okay.
Don't go changing your plan now, bro.
I got me one to check. Look, we just added some new stuff in the market structure. I'm sure that y'all seeing it now. Rob's going to post his update, but now it'll show you break of structures with this line, and you can customize it to show if it shows the last 2, the last 3, the last 4, however many that you want to see. So that's coming in the new market structure update. Just Rob will post it soon. So we've been working on some stuff for y'all. So y'all got me wondering if we messed up something in the code before.
Call up that programmer. What
right. You're like, hold on, the market structure is messed up. Peach Chief, you had a question on something on the 4 hour. Yeah, sure. Go ahead and annotate. It's all yours.
Yeah, man. I totally wanted to ask this one. So as you see here, we could say this is our demand for 4 hour. Well, I just take this whole range as a demand.
Yeah, I would do the same thing.
So then I would refine to this, I guess, something that reacted here. So let me just clear it up. And now this is our Asian range. Could you go to 15 maybe?
Sure. Let me draw this real quick. I'll draw your refine zone that you were talking about. So I think you said this is where you refined it to, right? Right there.
Yeah.
Marker. And then let me just put it H4. And then you say go to M15. Okay.
So, well, it's like this is the range of Asian. This. Sorry, can't annotate that correctly. Not an artist.
Don't worry. Good thing trading doesn't require us to be Picassos.
Yeah. So I was looking at the London Open, and now go to 4 hours. And I just want to confirm my bias if it was correct. I was looking at London Open, and I see this break here. So I had this question. Let's say this closes above this area. How would your expectational order flow change towards like this zone? Would you expect it to come back here somewhere, or would you still look for maybe retracement down since we tap this extreme zone here? Since we tap this whole extreme zone here.
You want to chime in on that one, Nathan?
Candle
can-
body close over the previous candle, is it? Yeah.
Yeah, if this one broke above this.
Well, it wouldn't really mean too much, to be honest. I wouldn't change the bias at all, like as in for this to go back up here.
Mhm.
No,
So-
I wouldn't look at that. Maybe if there was a 4-hour change of character, maybe if a low was taken, maybe this low was taken here and we closed above something on top, then okay, but nothing in particular with that candle over that one. What makes you feel like a bias should be changed on that one, man?
Well, so I thought this thing, let's say this is our previous demand here, and it was breaking by this candle. So I thought this would flip this supply here, and if it goes above, it's like supply and demand flip.
Right, I see what you mean. I don't really trade the supply and demand flips. I'm all about the minor structural breaks. Brian, you trade the breaks of supply and demand, right?
Hey,
Yeah.
also, if it had closed though, the 15-minute would have changed and you would have saw that. So if that had changed, the 15 would have changed also. So that would have gave you a different view.
Very true.
Because you could have said that, let me annotate. You could have said that it came down to mitigate something down here then. The 15 would have changed. You know what I mean? So you would have saw that.
Yep.
Yeah, so I was thinking how this 4-hour will affect the 15-minute bias. Will it like go up here, for example, to take orders, or will it just range again?
The way I kind of looked at this for me was that I treated this, online when you see people say rally-based drop or rally-based drop-based rally, this would have been considered drop. This would have been considered base. So I would have taken this as a whole demand zone, and this would have been considered rally. So this is drop-based rally. But for us, this is also what I would have considered as this is also what I would have considered. I would have considered this whole range right here of candles just to be our demand. Now, if I did the refined version, like you did, I already saw a candlestick body break below. So at this point, my whole directional bias is that price is going to do this. It's going to, like, I'm already treating that higher low as this higher low is weak. This high is strong, and I expect for it to put in a new low.
Could you go to 15 maybe? And go to the time frame we were, like, not the time frame, the time of the day we were talking about.
So that was this right here.
So I was looking at this tops that hit, yeah, and I was looking at as our extreme supply here. Do we expect this zone to react, or here to react more?
I would have treated it. My first look is looking here at N15, and I would have said this is the first place I need to see broken. But now I'm also going to take a look at other time frames to see if I see anything before. But ultimately, what I want to consider is it has to be above this right here, because this was the last low, and this supply had to go in and break. And that goes back to my POI rules that if it doesn't break a low, it's not considered supply. So everything above this orange line is the only supply zones I consider. So if I go to 14, I don't see anything above that line.
Could you go back to the 4, or maybe this will clarify it for it. Go to the 4-hour and highlight the whole range.
So that's it right here in the purple.
Yeah. No, highlight the blue, the whole range that you were highlighted earlier.
Oh, this
one.
Oh, okay.
Go to the 15. Scroll over to the left. Okay. Could you find an unmitigated POI within that one, which is the very bottom one down here, I think.
Mhm.
All right. And could you zoom up a little bit more?
Yeah, let me zoom in just a little bit. In fact, let me change the color, make that so y'all can see it a little bit brighter.
Could you highlight it from the inside bar, the top of the inside bar right there?
Mhm.
Yeah.
There you go.
Look at it. The price tapped in, but it failed to create a new high. It failed to create. So even if you were looking for longs, it never even breaks none of these highs anyway. So that in return, this becomes weak. So if you had looked at it like that, then you probably wouldn't have got confused because it had tapped in, but it failed to break above right there. Cheeky, if you understand what I'm saying.
Man, I was talking about here because I was looking for this to break above here and maybe
Oh,
see
okay.
some reaction from this supply.
Oh, from here.
Yeah,
Oh, okay. I got
I
what you're
didn't
saying.
see that, and I wanted to see a close on my 4-hour because it was like 30 minutes from that, and it just went to this external liquidity here over the session. So I was wondering where did it react from, like this whole thing? And would, for example, if let's say 4-hour closes above this whole range, would it influence, for example, the bias of, let's say, Nathan or Brian to look for longs maybe?
So for me, I would have said, okay, like I mentioned, I would have looking for this and I would have just gone through the time frames. The lowest I go is the 10-minute. So I don't see anything. All I'm seeing are bearish candles. I'm not seeing anything that would change. So by the time we get to 10-minute, I mean, I've already engulfed this candle here. So if it doesn't pass this high, to me, this is not a supply and demand shock. And inflow jet, this is one of those times where both the supply and demand shock and a structural shock are both the exact same point for me. So what ends up happening is it doesn't pass this high, but what we do get is we get a break below these lows. So below this Asian range, we have a candlestick body break on the 10-minute. So therefore, my bias would have been, I would have taken this sell right here. And I would have taken that sell just like that.
Today.
Does that make sense?
I took like 2 break evens before I even get into that one.
Yeah, it was kind of choppy. I mean, this is basically a range. This is ranging price behavior. So
I had one that I ended early, but I moved my stop too quick, and I think I'm starting to learn not to move my shit. Like I move it too quick. Like as the one I think I ended on the 5-second. As it breaks, I move my stop to break even. I think I'm gonna just wait for like the 1 minute or 2 minute to go. Because even sometimes I move it at the 1 minute structure break, it still comes back and like took me on and then go.
Yeah, I mean, that's you'll have to refine your rules. Like something that I use currently is I just, when it gets to 50% of my take profit, I just let it move it to break even. I mean, that's usually 2.5 hour, but then there's also
I'm gonna try that.
There's also, when I start seeing heavy wicks against my direction, I just go ahead and move it to break even because I say momentum slowing down. So it's just, there's different ways that you can look at it. So, all right, guys, we're right a little bit past the time, but we got one more question that was asked for us by Rob. So we're going to cover that and it'll be our last question. I'm going to turn it over to Nathan to let him lead it off.
Yeah, so the question is based on POI selection. So I'll just give my way of how I do it when it comes to marking up POIs. I think Brian, it'd be good to have your input too, because I think me and you are a little bit different when it comes to marking up the POIs. So I'll just do it real quick. So basically 15-minute chart, how I mark up my POIs selection, right? So for me, I look for three things, right? So say here we are bearish, right? So I'm looking for a sell candle, a buy candle that gets engulfed, all right? Or I'm looking for a doji, or I'm looking for wicks, unmitigated wicks, all right? So I'll give you an example here. So on the 15, like I see this here, and I'll drop down a few time frames and I'll look for a candle, a buy candle that gets engulfed, right? So here it's a perfect example. Here's a buy candle that gets engulfed. If the wick is unmitigated, I'll take the wick. We can see it again over here. Back on the 15. So I took this one, drop down to the 14. Do I see a candle that gets engulfed? Drop down to the 10. I believe I took this one. Maybe it could be even on the 18. I think I went up. Yeah, I went on to the 18. It was a little bit more clear. So here, a buy candle that gets engulfed. So that's how I mark my POIs, simply moving up and down between the 10 and the 15. If I have to go up to the 18, I will. Here's a wick I took as well. Here's another example of another zone. So that's how I mark up my supply and demand zones on the 15 to 4 hour and everything. It tends to be quite useful because this is where the exchange of hands took place. I don't like to refine anything less than 10 minutes. I don't think there's a need to over refine things, but this is where the exchange of hands took place, where we have the last buy to sell. All right. That's the way I mark up the zones. Brian, you mark them up quite differently, do you?
Yeah, if I can get off mute.
I was thinking it's awful silent.
Yeah, I'll show y'all how I kind of gave y'all a little bit of a preview when I was doing this one. But essentially, I got 3 rules for POI selection. So here are my 3 rules. 1, it has to break a high such low. Now that can be internal or it can be an internal or external. I'm not too particular on that. Secondly, it has to be a quick move. What I mean, this is kind of subjective, but what it means to me is that I want to see it move fast from a location. And then third, it has to have strong candles. Now, strong can also be read as indecision. I mean, not as, as imbalanced candles, but that's not the only definition of what I consider strong. Or it can also be engulfing candles. And if I can't spell, I'm typing fast, so don't hold it against me. So what that means is, like, when I look at a point, like I was showing y'all here, this, for instance, it breaks through that spot. This is number 1 for me. 3, you can see that it has some imbalanced candles or strong candles. And then 2 is the part where if you look at the move, it took 1, 2, 3, 4, 5 candles. But look at how quick that move was and how much there was not really bullish pressure coming back. Maybe this small bullish doji, but then after that, it was nothing but bearish, bearish, bearish. That's what I consider a strong move and a quick move. And so you can see that kind of play out over and over again. So for instance, here, this is what we would have considered. Price comes down. This would have been an okay move. And then price comes back and has basically a reaction, and then it goes through and it breaks through. And I still got my strong candles and stuff like that. So I would expect this to be a point where price goes down. Now, right where price comes over here, this would also be considered another POI, a strong POI to use for me, simply because you can see, you don't really see imbalance, but you see big body candles. Well, here's imbalance. Big body candles, you see consecutive candles that are bearish, and you see the move took 1, 2, 3 candles before it ended up breaking these lows right here. So that's kind of what I use as my criteria. And like Nathan and I only use 10 to 15 for my like trading time frame or middle time frame. Sometimes I look at 30 minutes, but I won't go anything lower than 10. So I don't look at 5. I don't look at 5. I don't look at 6, 7, 8, none of that. I want to see at least be 10 minutes or higher. And so I apply the same thing for the 4 hour. So hopefully that answers everybody's questions.
Definitely the most important thing that you just said there. It has to break a high or a low. That is so important.
Yeah. So like, for instance, guys, this would have been considered a wick break right here. So this could have been, let me circle it so y'all can tell. This would have been considered a wick break, but you remember, I only use body breaks. So for me, I saw this, and this all was one move, and then it comes back up. So you could have taken this here, or I would have had another POI right here. So those would have been my two spots I'd have been looking at when price was coming up. But more than likely, I'm going to take this one simply because this is the extreme of the leg. So it made, let me delete some of this stuff because it will be a little bit confusing, but this was one leg. Now this is one leg down, one leg up, and I consider this all one leg down. So this would be the extreme of the reaction leg that was able to break through the last low to me. So that's how I choose only this one or this one, because these are my two extreme legs. And that's just how I always focus on trading extremes, but it's not always the extreme that most people think. It's the extreme of whatever reaction leg I can find. And as you see, price reacted from the extreme reaction leg and went down.
Quick question. So on the second leg, it didn't break that. So did it break that? Do you go by breaking this wick right here, that long hammer, or what? Or did you go by
body? So
okay.
Here's the wick, and then here was where it's broken by body. Does that make sense? This is the body break that it had.
Right? Okay, I see it now. I see it.
Yeah, this, even though it broke by the wick, it means intention, but I'm already at the 10-minute time frame. If I couldn't go anywhere between 10 and 15 and find this to be a body break, I'm not going to consider this as high probability as much as I would consider this one to be more high probability.
Okay, I got it.
Awesome. Well, hey guys, thank y'all so much. We're respectful of your time. Thank y'all so much for tuning in. Thank you, Nathan, for answering questions, and thank you for everybody for asking questions, guys. We're going to continue our calls. We'll have another call on this Thursday Q&A with Rob. This Q&A, this office hour session will be up on the Teachables website for the next 48 hours. So definitely soak up all the information that you can. One ask for the next call. Just go ahead when you log into Zoom, go ahead and sign in using your Discord name, please. Just one little ask that we have for y'all. But if you have any questions, feel free to ask inside of our Discord, as well as don't forget to book one-on-one time with Nathan, Rob, or myself, because some of these questions we may need to go a little bit more in depth for you to kind of really help your comprehension. But there's so many things that you might end up finding out just in our one-on-one time of questions you didn't even think to ask, but just because you have one of us in our dedicated time, we're able to really spend hands-on time, chart time with y'all. So definitely don't forget that as a resource, guys. But if not, we will see you in Discord, and thank y'all so much for tuning in.
Yeah, thanks, guys.
Thanks, guys.